This panel is again being moderated by Alessa, and we have George Darrah, principal at Systemiq Capital, Jay Lipman, co-founder and president at Ethic, Kevin Webb, co-founder and managing director at Superorganism, and Sylvaine Rose from PRI. So enjoy the panel. Can we put the mic on, please? Can you put Alessa's mic on?
All right. Is it working? Yes.
Yes.
It is. All right, guys. While we get everybody mic'd up, I will summarize a little bit where we're at this point, because for those of you who were here in the morning as we got started, we set the stage really clearly. We got all of you guys here in this room, not just for the amazing conversations and the synergies that can come out and go back home and feeling good about it, but also so that we can coordinate action across stakeholders. This is why we made sure to have the science side, the data, all the investors across different asset classes. We're about to talk more on the early stage side of investing. This morning we went into asset management. And so we really want to make sure that the follow-ups are going to be concrete and action-focused. I know that most of you guys in the room, especially the ones that I've followed up with today, are on the same page. So as I said earlier, we are going to be launching a working group on nature investing tomorrow in the global community of TTI and coordinate with various partners, a lot of you guys in the room again, to make sure that we can all join forces to see what we want to see. All right, without further ado, please guys, join me here. We're going to start with introductions, and ideally introductions diving into a first question as well. So if you guys could kindly introduce yourselves and maybe start by telling us the different verticals of nature investing that you look into. This morning we started by defining nature investing and really like what everybody's looking at. So it'd be great to hear also on your side, quick introduction and what you look at within nature.
Okay, thank you. Hello everyone, my name is Sylvaine. I'm a senior specialist on nature at the UN PRI, Principles for Responsible Investment. We're a network of over 5,000 signatories, so asset owners, asset managers and service providers with a global distribution, which does mean that we work with a lot of different investment mandates, a lot of different market considerations. And so what I do in my day-to-day job is very much talk to that full signatory base and understand how can we raise the ambition in terms of nature and biodiversity and integrate it into the decision making. It does mean that I have to look across asset classes and also understand, is it that I need to make the business case to specific investors to understand why is it a risk for them and why they should integrate it into even just their mainstream investment. As well as looking at more dedicated ventures that could have a positive impact potentially to nature and biodiversity, and really looking to kind of leverage those different learnings and bring it to our full signatory base to really generate at scale the impact we need and we've heard talked about throughout today.
Thank you, welcome.
Hi everyone. Oh, great, this works. Thank you for powering through with the last panel. I'm Kevin, I'm with Superorganism. We are a brand new VC firm that is entirely focused on biodiversity. Our view is that nature loss, much like climate change, cuts across the whole economy. And so our approach is consequently holistic and looks across the economy. We center in three big verticals where we think that there are venture-backable opportunities today. So first, we look at the industries that have historically been responsible for biodiversity loss, and we evaluate them through the lens of extinction drivers. So pollution, invasive species, habitat loss, overexploitation. We want new technologies and new approaches that can disrupt or transition those industries. Second big theme for us is all about the intersections between nature and climate. What are business opportunities for nature that maybe didn't exist 10, 20 years ago that we can exploit? Maybe exploit is the wrong word, but we're looking at adaptation, nature-based solutions. Also, how do we make a net zero transition in a way that minimizes harms to nature? And then finally, we do a lot of enabling tech. So AI, satellites, genomics, but our specific view is how can we get this in the hands of conservationists? So that's us, and we're doing very early stage investing.
Awesome, mate, super interesting. So I'm Jay Lipman. I'm one of the co-founders of a company called Ethiq, but also co-founder of an organization called Nature 2. So those two hats are both very oriented towards getting people to adopt sustainable and impact investing, and specifically nature-based investing. So through Ethiq, it's a technology company. We founded it about 10 years ago in San Francisco. In those 10 years, we've really focused on accelerating the adoption of sustainable investing with a lot of the more sophisticated families in America. We've raised about $5.5, $6 billion, and we focus on areas from climate, nature, through to human rights, really helping those families figure out what they want to invest in and then helping them deploy that capital. And now that experience really led me to where I focus a lot of my time now, which is how do we get nature to become a standard part of every sophisticated investor's portfolio? Right? How do we dramatically accelerate the adoption of nature as a piece of an investment allocation? How do we educate that investment community? How do we create a movement around that? And then how do we accelerate the maturity of the nature-based investment market such that it can accept dramatically more capital? And the way that we do that through Nature 2 is by creating this normality, or this idea of a 2% allocation to nature, and getting investors of all forms to commit to that 2% transition over time, such that there is the requisite demand that can then accelerate the development of the market. And that can be across different areas of nature-based investing. It can be venture, it can be project-based, it can be fund-based, it can be blended, but really looking at how do we take a lot of the work that a lot of people here are doing, and how do we just dramatically accelerate the demand for it? Because the supply is amazing, right? Many of you are running funds that are doing incredible work. We want to make it something that investors are normalized around, right? Something they're familiar with, something that when you take it to them, this isn't the first nature-based investment they've considered, and they feel comfortable in exactly how to deploy those dollars into that form of investing. So that's me.
Thanks, Jay. Hi, everyone. I'm George Darrah, a principal at Systemiq Capital. We're an early-stage climate tech VC based in London, but investing across Europe and North America. And I think the way in which we look at nature and climate more broadly is it's an outcome for us. It's an outcome of disruption, leveraging these extraordinary technologies of industrial biotech, electrification, and digitization across the entirety of our economy. Every company has an impact upon nature. And so we're often looking at, well, has this company actually delivered a positive outcome for nature or biodiversity once it's at scale? Or indeed, is it actually in almost the intrinsics of its business model, making money actively from the restoration or protection of nature? So I'm really just delighted to be here, because I think it's a very unusual conversation that would not have happened even 2-3 years ago, to have VCs talking about investing into biodiversity. So absolutely delighted to be here and looking forward to getting into it.
Agreed, George, and that's pretty exciting, because to pat ourselves on the back for a moment, we have gone a long way in the VC space to be having this conversation today, and with so much interest. And so perhaps getting into the positive side here is SWOT analysis title of this panel after all. George, perhaps starting with you and going reverse order. What do you see as the core strengths of the narrative of nature investing? So if you're thinking about, hey, and we talked about narratives this morning as well, because they are important. We are all here in this room educating others outside on what nature and biodiversity means in terms of investing, in terms of building it as an asset class, creating new markets. And so from a narrative perspective, what do you think are the strengths to highlight about nature investing? And what do you see as the main innovation opportunities that you currently look at?
Look, I think it's actually, in some ways, an easy story to tell, because I have yet to meet someone who says, I hate being in nature. It's the worst thing. I wish I spent all my time inside. It just doesn't happen. And so there's a very human experience that connects to the preservation, the experience, the visceral experience of being in nature. And so when you have a company that can deliver that other incredible human incentive profit, as well as an experience or a protection or some story around nature, it's a very powerful combination. And certainly we don't find that difficult to communicate. But what we find difficult to communicate is often the venture scalability of the business model. And I think so often we find that there's either one or the other is lacking, and it's very, very rare in our world to find those two things connecting together. And when they do, the results can be extraordinary. And we've got some really remarkable companies in our portfolio. You will have heard from Nature Metrics earlier. There's another company just a few blocks up the road called Basecamp Research, who are actually decoding the genetic wealth of nature to create new medicines and products. And so the technologies actually that are happening around AI, around the ability to act in the field. I mean, Basecamp's founding story is that they did the first off-grid sequencing of DNA on an ice cap in the middle of Iceland because the technology at that point was at a tipping point where they could do that. And that was only 4 years ago. So we're at this extraordinary moment in time where things that were too complex to comprehend, let alone commercialize, are now coming into fruition because of developments across the whole of the economy. This isn't just like in nature tech, we've got excited about this like little thing. It's actually pulling from significant areas of the economy. And one of the things we had our AGM earlier, and one of the things I was getting excited about is like we have had thousands of years of leveraging nature for its biomass. Basically, burning nature has been the thing that humans, we're very, very good at that. And what I'm seeing now is the venture scale opportunities are in leveraging nature for its information. And it's only now that we can actually have a decoder that allows us to understand that information. And we're really at the brink of something very special there.
Can I just extend one of George's points?
Absolutely.
So one of the things you said is so on the money, because we're based in America, right? So we manage portfolios for thousands of families across the country, but also across the political spectrum. And what's really interesting is, being English and being in those conversations with thousands of these investors, which I've done in the last 10 years, people don't really know where I sit. So I can have really open conversations with people about, like, what are their priorities? And that's what our job is helping people figure out what are the issues you want to prioritize in your portfolio across these 19 issues that we cover at Ethic, and then we help them kind of drill down into those issues. Now, what's interesting is climate has become a political issue, and it's really polarizing, right? So when people bring up that issue, it will often actually push clients away from us if it's not the right client. And so we always have clients try to bring up the things they prioritize most. Now, I was with a family specifically in Topeka, Kansas, which I highly recommend you go to. Beautiful part of town. Really the middle of America. And we were with this very large family, and they specifically said at the beginning of the conversation, like, look, we know what ethics about, we know what you talk about, we're just not a climate family. It's just not part of our politics, it's not part of our conversation, but we want to talk about the things we care about. So I put it on them. You raise the things you care about, right? So they talked about family, they talked about faith, and then they talked about their farmland, and they talked about their ranch, and they talked about these things that they connect with. And what we realized really quickly is like, these things that are so human, to George's point, that connect with absolutely every one of our clients. And we've realized this connects with essentially every single one of our clients, whether it's oceans, whether it's forests, whether it's food systems. There's something that each of our families will connect with, and it comes back to nature and it comes back to conservation. And you tell those investors that they are now conservation investors or nature investors, they connect with it every single time, right? Because you're taking that kind of ideological standpoint, you're taking it away from that, and it does create this connection to that form of investing. The next step is educating them about how to actually deploy into that space. But to your point, it's almost 100% of families connect with it in a way that doesn't happen with any of the other issues that we talk about. So,
Thank you.
I'm going to answer this in two ways. So first is big picture. Why is it now exciting? If I were to step back, the opportunity right now is to essentially get in on the ground floor of what I would argue is humanity's greatest, most undervalued asset, which is nature, right? One of the reasons why we pollute, why we harm in so many different industries is because its positive benefits are not really accurately priced in. And to George's point, we now are starting to develop technologies that enable us to see the actual impacts of supply chains. It's no longer impossible to avoid these or to see them as invisible consequences. And so I think you're starting to see that lock into policy in some really exciting ways and tailwinds that we were frankly not anticipating when we were starting Superorganism. That's the macro view. The micro view is it's the beginning stages. And so that means that there are not a lot of people in this space right now. And so your ability to develop expertise and get in early, whether or not you were early in climate, it's a great opportunity to develop some expertise and network and connections. It's an amazing community. And then also because a lot of biodiversity doesn't necessarily, there's some intersection with climate, but there's a lot of areas that don't necessarily show up in a climate mandate. You can, wind up finding better pricing advantages. You can get into deals that maybe other people are passing on, which I think ends up leading to a superior investment approach.
I think maybe just to close off with a bit of a pragmatic take, in the sense of, if you look at investors who are increasingly starting to understand their exposure in their portfolio to nature-rated risk, in great part thanks to all the momentum that we've seen from policy development, as well as with the publication of the TNFD disclosure recommendation, there's a reality that no one's going to be able to divest from nature or from specific high-impact sectors, either because they're highly impactful or they have high dependence. If we're talking about agriculture, no one's going to divest out of agriculture. We need to feed our population. What that means is that we need to look at transition finance, at a almost nature-positive transition finance, and ensure that we are channeling greater financial flows towards practices that are aligned with the mission that we have set ourselves as part of the Global Biodiversity Framework. And so this whole idea of nature investing, well, it's there for the taking, and for investors to think this is where we should be channeling more of our investment now, because this is the way the new norm should be, realistically.
Thank you, Sylvaine. So time to dive into the challenges, which we did earlier as well. And here I would love to hear, perhaps again, George, starting with you, coming this way, I would love to hear how you look at the challenges that you guys specifically face investing in this area, and also zooming out from a macro perspective, the challenges to bring more capital at scale into the space at the moment.
I think the narrative attraction is a double-edged sword, because it means that lots of people want to build things in this space, which is fantastic. In some ways, I'm like, the more people are building, the higher likelihood something will be good in all of those things. But it does create, it often creates a kind of a narrative in itself around, for example, there's, if I speak openly about some of the startups, you see a lot of biodiversity credit startups, for example, or biodiversity analytics startups who are all piling in on this narrative around the TNFD, unlocking this huge groundswell of demand for measurement services in the asset management industry. And you go and talk to the asset managers and they're like, yeah, this is interesting, we're trialing iceberg, we're trying, like, it's actually a space that's quite hard to differentiate yourself. It's quite difficult to see how big this market will be, and it's often by people who have no real experience in these spaces. And I think that can actually undermine often the credibility of a biodiversity startup, despite actually being, I'm huge, anyone should go out and try and build something in this space, because I think it is so exciting. But there is a challenge there, and there's a challenge around product market fit, the size of the market. So I would say actually on the emerging stuff that often we hear bandied around TNFD, SBTN, etc. The opportunity as a VC isn't that exciting. Where I see the really exciting stuff is the people who are willing to go into the unsexy, I am doing more efficient environmental impact assessment monitoring. Like, there are trillions of dollars allocated every year to infrastructure. Even just 1%, I mean, it's like $50 billion globally spent on environmental monitoring. Like, these are like massive markets that no one really talks about. We're all talking about biodiversity credits. There are not many biodiversity credits. I don't know if you've seen any. I haven't seen any recently. And that's the stuff when you know that someone has taken the time to really understand the true size of the opportunity, the true nature of the opportunity, and is building something that can disrupt the existing quite significant market. So those are some of the themes that certainly we see playing out. And I think the narrative is so compelling and seductive, you can get sucked into it unless you truly understand what are the actual numbers at play here.
Yeah, so the leverage points as well, where things can be really changed and moved forward. Jay?
I'm curious, who's actually in the room, how many people are managing nature-based funds, nature-based opportunities that they are pitching to investors or families, or just pitching to investors generally? Now, how many of you are finding that they just have a lack of familiarity with this notion of nature-based, and you're having to kind of do that underlying education? Super one. So So I'm looking at it from a different lens, right? You're looking at the venture scale opportunities, this early stage. We're looking at the funds, right? How do we accelerate capital into the funds so that you guys can do more of what you do, but we can just look at large scale capital deployment, taking this from a space that's getting billions and looking at tens of billions, hundreds of billions, because we've got an $840 billion gap we've got to close, otherwise we're going to lose nature. So we're looking at how do we kind of get that adoption, right? What are the mechanisms? Because my job, talking to CIOs, talking to investors about what it is to invest in nature and then what is stopping them. And what's really interesting is the idea of nature-based investing. Number one, it hasn't been formalized to the degree that as a CIO, you can look at it as real estate or real asset, or obviously you guys look at the venture space, but especially on the project-based funds, these larger vehicles where it's blended structure, right, where it actually fits into an allocation is so crucially important, because if it doesn't have an allocation, it doesn't get allocated to. And as a CIO, you may have a matriarch or patriarch of a family office, or you may be a large institutional investor who is being pushed to deploy into nature. But as a CIO, you need to know as a fiduciary that you're actually allocating effectively. And taking my ethic hat off, because we are an asset manager, we have a nature fund, and putting my Nature 2 hat on, my co-founder over here, Gally, the legend over in the back, give us a wave, Gail. There we go. It's about a movement to get these investors to not only understand the power of the impact that can be had, but also the fact this is an uncorrelated asset class that actually has really interesting returns, purely from an investment perspective. A lot of our families are already deployed in ag or in some kind of forestry project. They don't know it's nature. And so it's formalizing the narrative around it such that when you are asked, okay, is this real estate? Is this real asset? Why is it being priced as private equity, but the returns are real asset? That there are actually really tangible, viable answers you're giving them that are sophisticated and also kind of academically validated, such that you say, if you're interested in nature, this is exactly what it means to deploy, and then it's creating the demand for it such that the space can actually accept the supply. And so we look at it from the fund side, and those concerns, I think when you get to the largest sophisticated investors, they need that kind of, that playbook, which is, I think, what we're trying to focus on Nature 2, is providing that kind of step by step.
Indeed missing. Thank you.
Again, I'd echo everything you've said. I fully agree. The biggest fundamental thing is, again, it's early. So if we're comparing against climate, right? We've talked today about how climate has this benefit of CO2e as just a consistent measure that you can apply against a company that is emitting carbon, sucking down carbon. The atmosphere, hopefully there are no meteorologists in the audience, is basically a bath, right? And the wonderful thing about biodiversity is also the thing that makes it hard. It's different in different places. There's values judgments. There's tactical challenges with measuring accurately in different places that require different technology stacks, Naturemetrics being a part of that. And so I think that's a limiting factor. Another factor is the capital stack is early. So we're early stage VC. We are one of the only biodiversity-focused VCs here. I know at least one in the audience. Greg, raise your hand. Sand River, go talk to Greg. But that means that there's not downstream VC capital. And so the startups that we're working with typically have to do two things that are very difficult. One is start a company, hard. You have to find the right customers for phase one in that early stage, but you also have to have a view to how is this market getting bigger. And sometimes we hear biodiversity as a sector. I think that's the wrong way to look at it. I think biodiversity cuts across all sectors. And so the opportunity is really to look at places where you can have a venture scale approach that is, like George said, using new technologies and new approaches to fundamentally rethink industries. Yeah, it's extra hard because you have to build the business, but you also have to deliver these ecosystem level benefits in a world that I don't think yet properly gives you credit for that. The good news is there are a lot of founders who are extra motivated by this challenge, and their ability to hire is unreal. So yeah. I'm optimistic.
I think I'll certainly echo what has been mentioned before in terms of the lack of understanding, including on the investor side, and there is a certain level of accountability there in terms of needing to upskill a lot of staff to understand concepts such as biodiversity, nature-based solutions, and to really foster, as a result, moving from just an interest, I would say, that's there at the present, to a real appetite, in particular because that appetite is going to be needed to outcompete the perceived risk. That's the biggest challenge I really see at the moment, is investors remain risk adverse, and so they will want to look at products they are familiar with And we've heard a lot of examples today around fixed income. There's obviously, we're now talking about venture capital, around private equity, but it's just not at the scale that's needed, and that perceived risk is still there. I think, however, there's been some significant policy and wider ecosystem developments that are very positive in that regard. If we think of even just in the UK, the Environment Act and what it has done with the biodiversity net gain, we heard from Gresham House earlier today what they've done from a real asset perspective, benefiting from those policy developments. The EU taxonomy, the biodiversity criteria, is far from finished and hasn't touched the whole agri piece. But if there was that assurance of this is what can bring significant positive impact, do no significant harm when we talk about those kind of practices, that would be certainly helpful in mitigating that perception of risk that is still acting as a challenge for investors.
Thank you. So maybe diving into concrete examples, Kevin, George, from your portfolios, you briefly mentioned one already, and for everybody, something that illustrates the point of what we're talking about, but also perhaps where you found an opportunity yourself, not expecting that or not being educated about that yet. You know, you found these kind of unusual investment opportunity that turned out to be a good decision.
You go first, Kevin.
All right. Yeah, so we've invested in 17 startups, and they're all weird in different ways, which is why I love them. So we're in companies that's different. I talked about we evaluate existing industries through the lens of extinction drivers. To give you an idea of a couple there, we're in a company called Adversa that's making high-end luxury leather out of invasive species. So they're working on the end-to-end tracking to make sure that you are harvesting pythons from the Everglades, lionfish from the Caribbean, not in their endemic ranges. We're also in a company called Bloom Bio that is genetically engineering microbes to be able to break down heavy pollutants in sites that need remediation. In that overlap between climate and biodiversity, we're in a company called Funga that's using intact soil mycorrhizal networks, so fungal networks, because it turns out that trees that grow in biodiverse soil wind up growing faster. So they're using the carbon markets in order to also effectively rewild soils and deliver a benefit to timber companies. We also just committed to a company called Spore that is using AI on commodity CCTVs to monitor for bird impacts around offshore wind farms. That sounds really niche, but it turns out that the Ørsteds of the world view this as an existential risk. Their time to permitting is often delayed by environmental review, and part of that bottleneck is because they have access to only so many ornithologists who go out for a day or two a year versus something that could be on device watching 24/7 in all weather conditions. So really thinking holistically about how do we advocate for biodiversity through the lens of startups.
Thanks, Kevin. So I want to talk about two companies, one that's in our portfolio and one company I hope to invest into in the future, maybe. And both of these companies are driving what we describe as system change. They are fundamentally reshaping the sector that they're based within. The first one is Basecamp Research. And Basecamp Research, we met 3 years ago. We invested, led their Series A 2 years ago. And what they're doing is fundamentally changing the way in which we both value biodiversity for its genetic information and produce medicines, food, and materials for the bioeconomy. And they're doing this by going out into the most remarkable, remote, inaccessible ecosystems all over the world, accessing that genetic information in partnership with the local country. And that's really important because I don't know if any of you are familiar with bioprospecting in the past, it's led to some terrible results. You know, Costa Rica dropping $100 million on building a partnership that never worked. A lot of bad blood in this space around biopiracy. Basecamp are building that new value chain from nature. And the data set that they've built, which is now bigger than any public data set. It's extremely powerful. They've not just acquired all the proteins, but also the environmental metadata. So every protein that they have is labeled with, this was the salinity, this was the pH, this was the temperature in which that protein was found, which turns out to be the missing link that gives them the ability to predict the function and structure of future proteins in silico. So they do not need a lab. You go to their offices just over the road. The lab is like a room this big, and it's just like someone putting samples of DNA into an Oxford nanopore sequencer, which is like a cigarette case, that tells you exactly what the DNA is. And from that data, they have been shown that they can operate more more accurately than the leading algorithm out there in the world, which is DeepMind's AlphaFold. So they're doing something extraordinary based on a hugely proprietary database. And every time they sell a therapeutic, an enzyme, the ecosystem in which that protein was found gets a share of that value. So it's a whole new way of like looking at genetic assets. So that's the first one, and I think they're building something extraordinary. The markets are absolutely enormous. I mean, like global therapeutic sales is well over $1 trillion annually. So I'm excited about that company. The second is a company that we haven't invested into because it's a little bit earlier. But I met recently, and you know, Kevin spoke a little bit about invasive species. This is a subject we just don't really hear much about because, again, it's very unsexy. It's a business that's run by, you know, sort of rent-a-kill-esque operations in their vans, going out to spray kudzu in the Midwest or Japanese knotweed. But it's everywhere, and it is billions and billions of dollars being spent on managing invasive species by people with pickaxes and glyphosate. I mean, it's just terrible. So imagine if you could build a company that could capture some of that value through providing tailor-made, very specific, low toxicity solutions for every single individual invasive species with zero collateral to any other species around it. And that's what this company called Invasive Species Corporation. We'll help them rebrand when it comes to it. But it's run by a 2-time ag-tech entrepreneur. She's had some fantastic exits. And she is basically going out into nature, finding the specific microbe that produces a specific toxin for that individual species, and then building a product around that. So you can have the kudzu biopesticide, and you throw the powder in, the kudzu plants die. This stuff could be amazing because if you can just capture a small part of that, and I think 100 billion might be a bit big, but it's between 10 and 100. Like, there is a huge pie here. So these kind of opportunities are really exciting because you're delivering huge value to the customers, but also for biodiversity. I mean, I don't know if anyone's been to Hawaii. Like, it's a wipeout for the local kind of bird species in many ways. Like, even walking around DC, like, where Kevin lives. You
I live in New York.
now,
How dare you?
You have, yeah. But like the river is just completely covered in knotweed and kudzu. So these things, I think, are very powerful because they are commercial, they're hugely positive for local biodiversity, but people can also see them. And so there's a local community element to it as well, which is really exciting.
Very cool example, George. And it's funny because you call it an unsexy opportunity, but I think for a lot of us here in the room, this is a really sexy story. Thank you for sharing. Maybe the next question for Jay, going into frameworks, metrics. So what kind of mental model do you use when looking at this investment sector as a whole? And what are you currently measuring in your portfolio for nature?
Can I talk about a little bit about what he said, and then I'll come back
to
it.
For it.
It's a great question. But there's a piece of this which is, again, if people are out here like trying to raise capital from these investors, your question about what's interesting is actually so specific to the investor. And if you're talking to a university, right, that's based in Florida, they're really interested in mangrove restoration. Sure. Right? If you're talking to an investor, honestly, a lot of the Middle Eastern investors you talk to are really interested in ocean preservation. The University of Iowa, more interested in regenerative agriculture, right? And so the interest in the project, the interest in the fund, the interest in the product is actually going to be pretty reflective of the investor themselves. And it's crazy to see, for me, how much excitement there is for, number one, food systems, like everyone eats, everyone loves food, like that's actually a pretty ubiquitous one, but oceans. Oceans has been so powerful to see how it connects with investors that generally, and they'll openly say this, that they're not considerate of any other climate factor, but they love to surf, or they have a boat, and it seems innocuous, right? And again, some of these coastal investors, they see how it reflects their priorities, de-risking their assets that they own. They're in the hurricane path, they're in a flood zone. And so what's interesting reflects those conversations. And so just getting a gauge on that, I think is really reflective. On the metric side, I think what's been interesting is that as an investor on the fund side, putting the ethic hat back on, it's actually been fascinating to see the kinds of metrics and data that has become available. Dr. Vian Sharif that spoke up here, has been doing amazing work with Nature Alpha, developing that on the corporate equity side, which, as ethic and as a sustainable investor utilizing data like that, it's been fascinating to see the prevalence and how those data providers have proliferated with such high quality data. But I think on the project side, that's where there's the biggest need. Specifically, if you're going to institutional investors and talking about these projects, they want to understand, when CO2e is not a ubiquitous metric across all of these projects, they need to understand what you're measuring. And so that opens up the whole door of MRV, which is in itself a whole conference that we should have a conversation about. But again, there's incredible providers that are coming out doing cutting edge work, the technology, whether it's the LiDAR, the satellite work. Again, one of the co-founders of Nature 2 is also the co-founder of Sylvaine, which is one of the leading data platforms, providing that data around those projects. And so I think it's, and this is actually core to what Ethic did 10 years ago when that data around ESG started to accelerate and proliferate. I think now you're seeing the same thing happening in nature, where a lot of these data providers are just getting dramatically more sophisticated. They're becoming a lot more institutional scale, and that is going to accelerate capital deployment when trust is actually based on really high quality metrics and impact reporting, because that's what the clients need to see.
Thank you, Jay. I think Sylvaine, hearing from you, extremely well equipped to give us a bit of an overview of how you guys think about it.
I think what's a really big takeaway for me here is in terms of the role that those kind of actors have to play as enabler to the wider financial system. On a personal basis, I find it fascinating the type of projects you're looking into, the type of companies and technologies. In the grand scheme of things, there are certain investors out there that they don't necessarily like to surf, and it's certainly not going to be a good enough argument for them to look at their portfolio and try and put it on their balance sheet. However, they will ask about financial materiality and how to mitigate any risk identified. And the work that is being done allows us to come up with solutions and with opportunities and to highlight that risk and say, yes, there is a financially material risk here, and actually there's already all those sources of data that you could look to use, and we've already found way of different practices, different agricultural practices that you could look to replace instead or to mitigate those risks. And so that willingness to take on risk early on allows it to be scaled up to the rest of the financial system, which will be needed, again, back to that point of reaching scale to really realign our financial flows with our mission.
Thank you. Kevin, anything to add on the early stage?
Oh, I would just say, echoing that, for the people who are managing assets, we've been talking about the opportunity. The risk side of this is also really important. A lot of asset holders have assets that are not necessarily just capital, but are going to be exposed if there are policy tailwinds that wind up requiring deforestation-free products, for example. If you're in the business of producing goods and your Scope 3 side of things is deforesting in a different part of the world, there is potential for a couple of different, it's important to understand what those risks are going to be to your bottom line. So I think it's worth paying attention to there. And if you scale back, the opportunity is not just to start accounting for those removals of trees and deforestation, but also to start thinking about what are some alternatives, right? How are you going to be positioning for a resilient supply chain that are still able to deliver what we need on a regular basis, but hopefully does so in a less harmful manner? So we're in a company called Planet A Foods that is making a molecular alternative using precision fermentation to cacao. I don't know if you've been looking at cacao commodity prices right now, but they've been through the roof, partly due to climate pressures. And so we got excited because this is a way to produce foodstuff that is regularly used, consumption is increasing globally, and right now it's responsible for a lot of deforestation in some of our tropical belts. It also happens to be a very climate resilient approach, and it's an opportunity to go into a space where there have been 5 vertically integrated chocolate manufacturers over the past 100+ years, and they're potentially now going to be able to either sell into them or, we think, be able to play and compete against some of those big vendors. So there's really a lot of ways to be thinking about what are the assets you hold and how can nature play into that.
Yeah, that's a very interesting example, specifically also with what's been happening in the Côte d'Ivoire due to climate change. I know I've had a couple of discussions with some people here about that specifically and the solutions coming up. We're getting to time, so one last question for each one of you. Summarizing a hard-earned piece of advice, either for startups, for the VCs, for fund managers, Jay, Sylvaine, what would that be? Anybody who wants to start?
I'll go first. one of the things that happens when you build a nature tech startup, as Kevin said, you get a lot of people who are very excited about the mission of that startup. But often those people who are very excited are not always the people who are actually the most competent at delivering the role, especially commercial roles. And I think the hard-earned advice is probably like, be really ruthless about who you're hiring, fire early, and really spend everything you can on finding those magical people who can combine purpose and profits under the same hood. Like it's really hard, but when you see that coming together, that's when you get to build an incredibly successful nature tech startup. But it's really tempting to hire people who are passionate, but then you're kind of like trying to compensate on the competency.
Yeah, I'll go. That's a good answer. Back to the point of what projects are interesting is based on what the client or the investor cares about. Like we've raised $5.5–6 billion at Ethic based on asking what the client cares about. So I think with nature, if you're a early stage founder raising early stage funding, if you're a fund actually trying to raise capital, have the person you're talking to speak for the first 30 minutes of the meeting and figure out which piece of nature connects to them, because there's something, right? And there's always something that will really connect with them on a personal level, and then bring that back to the nature that you are trying to preserve in some capacity. And so I think it's all about that connection, getting them talking and getting them excited, because again, nature is, I think, the most ubiquitous topic that we have in any of these conversations. And so, that would be my...
I was going to say verbatim, be ruthless. It is hard, right? There's not an existing market that you're playing into. There's not a lot of familiarity on the investment side with what you're doing. And so expect that. Be your own toughest critic. Be ruthless about getting to who your first customers are, how they're paying you, why they're paying you. But I think it being hard is the price of admission, because what you're doing fundamentally is so important, and it's very privileged to get to do it. Like, I will go to cocktail parties. That sounds fancier. I'll meet up with friends at bars, and like what we all get to do is just fundamentally interesting. And I think it's what people would like to do so often if they had complete freedom. And so I think the challenge is be hard on yourself, have a good support network, because there's going to be a lot of no's and a lot of challenges. Make sure that basis is there. And then just go for it. We need more wins in this space. We need the Tesla of nature tech to exist. And that's going to make the next wave of opportunities that much easier to invest in. This is too important an opportunity to miss.
Mm-hmm. I think just to close up, and I doubt I'm the only one with that situation, but just don't overestimate the level of understanding and appreciation of nature and biodiversity once we step out of our bubble. I got caught out at a conference recently where I was ready to give a whole pitch to someone about biodiversity, and then I realized the person just didn't even understand what I was talking about. They kept talking about greenhouse gas emissions, which was not the point I was trying to make. And I just had to bring it all back down to, okay, what is it I'm talking about? And it does change the conversation, and that's just a reality we still have to deal with.
Indeed, indeed. Well, thank you guys so much. Please join me in thanking our panel today.